time frame correlation. Time frame correlation is how I'm able to frame my trade in a way where I'm able to catch really big swing moves, and it doesn't really matter what time frame you take it on because the time frame correlation works so well. So I'm actually going to show you a few examples of how I use time frame correlation to not only catch high risk reward ratios, but to give me a better setup overall, right? And just a higher probability setup, right? We want a high probability setup. So I'm going to show you how I use time frame correlation to achieve that. So without further ado, let's get into it. So boom, we are looking at high time frame correlation. So I just want to kind of start off with showing y'all some examples of time frames that I actually like to use, right? So for example, right here, you see that we have our higher time frame on the left side and we have our lower time frame on the right side. So these are both two examples of like how I like to trade. As a swing trader, right, I actually consider myself swing / intraday, right? Some of my moves that I take can last up to just a day or maybe a day and a half. So I kind of consider myself swing / intraday. I don't really hold trades for longer than a week personally. That's just me. But right here, you can see these are the time frames I use to achieve that, right? So right here, I would say this would be for more of like swing setups or swing plays, right? Things I'm looking to hold for more than one day. I'm looking at this potential time frame correlation. Now, if I'm looking to just kind of catch it for like maybe a day and a half, maybe hold it to the next day and close, that's where I'm looking at the 4 hour 15 minutes. So right here, I would call this more of like intraday, right? And I'm gonna kind of show you how this time frame correlation works really well. I just want to give you an example, right? Let's say we are currently in a downtrend on the daily time frame. So we're making lower lows and lower highs, right? So this is, again, this is gonna be my daily time frame right here. So I'm gonna put a D for daily. Okay, so this is my daily time frame, right? And I want y'all to notice something. When you're in a trend, the market does two things, right? Either goes up or down. It's gonna respect that structure. So if I'm in a downtrend, I'm just making what? Lower lows, lower highs, right? Lower lows, lower highs. Trends are pretty easy to predict, right? You can tell when a downtrend is gonna go up, it's gonna go down. But the real question is, how do you know when it's the correct time to get in? This is where high time frame correlation comes in, as well as where you are on the chart. So check this out. Let's say I'm in this downtrend, right? And I say, okay, this is my resistance level, right? And I know price should not break this level. If price breaks this level, we would no longer be in the downtrend, right? I would just be wrong in this point. Right here, I know that if we're gonna continue the downtrend, price has to come back down here, right? That is the target. Price has to come back down here and potentially make an even lower low. Why? Because in the downtrend, we make lower highs and lower lows, right? So if I understand that, you know, this is daily resistance, right? I guess you could say a pretty safe entry would be what? I enter somewhere down here, I put my stop loss way up here, and I'm targeting these lows. But then it's like, okay, technically, yes, that's correct, right? Yes, my daily is up here, my daily resistance, and this is down here, but I'm not really getting a good risk reward ratio. I'm not even getting a 1-to-1 on this trade, right? So that's not really ideal for me. So how can I maximize my risk reward ratio by using high time frame confirmation? Okay, so this is where we're gonna go back, and we're gonna go back to this example right here. So right here, if we just look at these time frame correlations, you can see that, okay, my daily is my high time frame and my 4 hour is going to be my low time frame. Okay, cool. So we're going to scale in on the 4 hour to see if we can get a little more information on this. We're going to come back. We're going to delete this P&L tool, right? Because we want to do something a little bit more interesting. So this is something really important that I need y'all to understand, right? On this daily time frame, this particular move right here, the correction, when we're coming back to grab liquidity, right, before heading back down to the downside, right, we have to understand that this pullback, if you look on a 4 hour time frame, you have a whole different structure set, right? Let me explain. So on the 4 hour, because the time frame is a lot smaller, you're not getting candle closes for each day, you're getting candle closes for each 4 hours. So it's going to be a lot smaller. So with this example, price is actually going to look like this, right? So price is going to look like this, make lower lows, lower highs, lower lows, lower highs, right? And again, I'm just matching what's happening right here on the side. Lower lows, lower highs, right? And then we got to this point, and then what happened? Oh, we shifted up. Higher highs, higher lows, higher highs, higher lows. So essentially, I am just copying what price is doing on the left, but on a 4-hour time frame. This is still the same exact movement, right? This is still the same instrument. But right here, as you can see, price on the 4-hour, we get a lot more structure, right? If I drag this over, you can see this is the exact, pretty much the exact same move, right? Right here, I can see that the 4 hours is in the uptrend, right? We're making higher highs, higher lows, right? Like we're not breaking these lows at all. We're getting higher and higher and higher. That is very important, right? And let me explain why that's very important. If I know that my high time frame is bearish, right? Is going down, and my 4-hour is bullish. Well, let me think for a second. My higher time frame holds more weight, right? My higher time frame is a lot more respected. It took a lot more time for those candles to form, right, to create that structure. So the daily time frame structure is way more respected than the 4-hour. So I know long term we're still looking to sell, because why? My daily is bearish. We're making lower lows, lower highs, right? If I understand that the daily is bearish, that means this 4-hour uptrend is temporary, right? At some point, this is going to switch back to match the overall time frame, and that's exactly what you need to wait for. So check this out. Right here, as you can see, we were making higher lows, right? Price was not breaking these lows at all, right? The moment price decides to shift structure on the 4-hour, that is gonna be your go ahead of like, okay, it's time to go. When price comes down and we shift structure, we break structure, right? And we start making lower lows and lower highs, this right here, this should be your entry. So instead of having this particular entry where you enter here and your stop loss was way at these daily highs, right? And your TP was like right here, and you didn't even get like a 1-to-1 risk to ratio. In this example, right, now that we see that we have this particular shift of structure, so we have this breaker structure, we have this retest, and we're coming back down to enter. So then right here, I could put my stop loss above this 4-hour high. Why? It's still structure, right? If this time frame is making lower low, lower highs, this should not break structure, right? Price should continue to move in this direction. Price should not break resistance. Price should respect this structure. So with that understanding that price should respect this 4-hour resistance, I can put my stop loss up here, right, and still go in the overall direction of the daily time frame. So because I am targeting the daily, right, I can still target these daily lows, right? So now I get a 4-hour entry with a daily take profit, and notice how my risk to ratio significantly improves, right? We went from not even a 1-to-1 to now we have a 1-to-2, right? This is kind of going a little further. The way I trade, I use Fibonacci, so I actually target the 27 extension. So me personally, I'm actually targeting more. I use Fibonacci. If you don't know what Fibonacci is, you can check out this video right here. But basically, I like to draw a fib tool for the swing low, swing high, and I particularly like to look at just the targets itself, right? And I actually target liquidity, right? So this level right here where we previously broke, so this lower low, as well as this 27 extension as well. So for this example, we could do the same thing, right? This liquidity is my TP1, and then my TP2 is going to be this 27 extension. So this is how I actually trade personally. So notice how we went from barely a 1-to-1, right, to a 1-to-3 risk to ratio. So that is how I'm able to not only scale in on the lower time frame, but target high time frame take profits, and it's actually in my favor, right? It's going in my directions. So yeah, this right here was just an example with the path tool, right? As you see, this is my daily entry, and then this is my 4-hour entry. Way better risk to ratio. I'm gonna actually show you this on a real chart and show you how this can work. So let's actually jump to something I actually saw last week, and we can kind of capitalize on that. I actually saw this last week. I'm just gonna show y'all kind of what I saw. Right here, price, we broke structure, right? So there's a break of structure right here. So daily time frame, we're making this higher high, right? And then we're coming back for this correction. So remember what I said. Let's go ahead and rewind price real quick. So right here, we have this correction, right? We have this break of structure. We're looking for price to potentially come back to retest this broken area, right? This is where structure was previously broken. So we're looking to come back and retest this potential area of interest right here. Again, looking for price to come back, give us a retest, and then break this high and then push higher. That is what we're looking for. So okay, cool. Daily time frame, we're on this uptrend. Now we're getting this pullback. Okay, so I'm on this pullback. What are my rules? Well, I said I want to wait for the 4-hour time frame to give me a entry, give me confirmation, right? With 4-hour time frame, we're able to scale in and get a better restore ratio. Okay, well, right here, we're on the daily, so I actually need to drop down to a 4-hour to kind of see what's going on right now. So the 4-hour time frame, we're actually doing something interesting. We're actually making lower lows and lower highs, right? So right here, as you can see, we're making lower lows, lower highs, lower lows, lower highs. So we're actually making, you know, bearish structure to the downside. I understand that, you know, this is short term. On the long term, price is actually going to look to push up to the upside, right? So I can actually look for a entry on this 4-hour time frame. I'm basically waiting for these 4-hour resistance levels to have a break to the upside, right? I'm waiting for price to give me that break of structure and then pull back and then push up to show me, okay, it's time to go up, right? So let's watch to see what price does, and let's see if we get that. So we're gonna play price out. We're gonna watch these resistance levels and see when price gets broken. And mind you, just to kind of mark it out, our daily support level is gonna be down here. So we have our daily support down here, just as a reminder. Okay, so right here we just got our break of structure to the upside, right? So first we got this retest, price became, and we retest this level on the daily. Remember, on the daily time frame, we were looking to retest this level, right? And now we're looking to push up. So that was step one. We got the retest. Good. Okay, so now we're looking for this 4-hour shift of structure. Right here, we got our first shift of structure on the 4 hours. So we had to push up, right? And now I'm just looking to see, does price want to keep pushing up, right? I got to make sure price doesn't want to go any lower. How do I make sure that the retest? So we have this break of 4-hour structure, and now we need to wait for another pullback before we can look to enter again, right? So basically, I'm gonna wait for this pullback to see where price wants to do. Okay, so we're getting a pullback. So we got a pretty deep pullback. We actually ended up breaking structure right here, right? So this is why we wait for the retest. If we would have just got in like immediately right here, we would have got liquidated. We would have got stopped out. So we waited for the retest. We see that price actually broke structure again. So we're gonna move this over, right? So this is our new 4-hour resistance, and we're gonna see again if price wants to break structure to the upside. So let's see what price does. We made another low, so we're gonna drag this down. Okay, so again, we're just looking to see when we get that 4-hour shift of structure. So right here, again, we're on this level, building up pressure. Price looks like we're having a strong push. Let's see what happens right here. So right here, price, we broke above, right? It went kind of fast, but I'll show you right here. We had a break of structure. So price, we came up, we broke structure. Right here, we had a pullback, right? Price did not break this low, so this was the low, right? This is the low. And then what happened? Price pushed back up. So we just made a first sign of an uptrend. We had a pull up, right? Retracement, and then we broke structure to the upside. This right here is my entry. This is what I'm looking to get in. Again, it was coming down, but then what happened? We ended up breaking structure, right? We had the pullback. It showed me it didn't go any lower, and then we broke back up. That is my entry right there. So I'm actually going to enter this trade on the break of these highs, right? So we broke these highs. And my stop loss, instead of having my stop loss all the way down here, right? Because this is daily support, right? Instead of having my stop loss all the way down here, now I can place my stop loss where at the 4-hour lows, right? So I can actually move this up all the way up here. So now I have a 4-hour entry. So at this point, what am I targeting? Well, let's go back to the daily time frame and see what our targets are. So right here, here's the daily, right? We're gonna draw our fib again. So here's the swing low, here's the swing high. Okay, so we're targeting liquidity, which is right here. Okay, and then we're also gonna target the 27 extension as well. So that's my second TP. So we're gonna target this 27 extension, and we're gonna see how price does. So now we have a 1, 2, 3 restore ratio, almost a 1 to 4, so a 1 to 3.71. So we're gonna see how price plays out, and if we get to this TP or if we get stopped out. So let's let it play out. So price is moving, we're pushing, right? Really good big push. Do we get TP? Do we get TP? Oh, so this is actually still playing out. Okay, so as you can see, right, price is actually playing out live right now. So this is actually the live chart. Price came very close to our 27 extension, like just like a few pips away. It was like maybe not even 5 pips away from our take profit, right? Can still get there, right, if you still want to hold. But as you can see, regardless, we had a great big push, right? Small stop loss. And overall, I think at some point it will hit, you know, it's just live right now. But as you can see, this is kind of like my entry method of like having a 4-hour stop and a high time frame target, which price is on the way to hit right now. Okay, so now I'm going to show you another example, right? But this is going to be with the 4-hour 15 minutes. So this is gonna be a intraday example. So let me show you that real quick. So right now we're looking at the same instrument, right? This is the 4-hour time frame. As you can see on the 4-hour, this was the push up, right? We are making basically the higher highs, higher low, higher high, right? We're coming back for another correction. So we're looking for the same exact thing, but just on a lower time frame. So this is my intraday setup right here. We are looking to come back and retest these levels, right? We're looking to kind of tap in and see, like, can we get a retracement here, and can we look to basically potentially push to the upsides we're looking for. So we're gonna wait for this pullback, this retest, and then we're gonna look for an entry on the 15. Okay, cool. So let's go ahead and drop down to a 15 minute to see what we can find right here. Okay, so right here, here's our 15-minute time frame, and as you can see, we are shifting structure, right? So we're now starting to make these lower lows, lower highs, right? Making more lows. So I'm looking to see price basically tap or get very close to this zone, right? And to see a potential shift to the upside for a entry. So we're gonna watch for that on the 15-minute time frame. Let's see what price gives us. So we're gonna watch for it, watch for this tap. Did we get it? Okay, so we get pretty close on this level. Okay, pretty much in the zone. So now I'm waiting for 15-minute resistance to get broken. So right here we are looking at this trend. So lower low, lower high, lower low. Okay, so I'm looking to see this 15-minute resistance get broken, and I want to see a retest off this level. So we're watching for a break and retest off of this particular level in the 15 minutes. So let's watch for that. Okay, so we break above, right? So now that we have the break of structure, we are waiting on that retest, right? So price, let's see if this is a retest. Right, and we do. So right here, price, we broke above. Right here, we broke structure. We got that retest. Price showed us it didn't go any lower, and then we broke back above these highs. So on the break back above those highs, I'm looking to enter. Right, and again, 15-minute, I can use a 15-minute stop loss. Right, so my last 15-minute low was right here. You can use the wick right here. If you're feeling a little bit more aggressive, you can even do this anticipated low, but I'm just gonna do the established low right here. So instead of having my stop loss all the way down here, right, for 4-hour support, now my stop loss is what is right here at this 15-minute low. So cool, we're gonna look to see what the target. We're gonna jump to a 4-hour. What can we target? Okay, so 4-hour time frame, we have this low right here, swing low, swing high, right? And basically we can target liquidity right here, and then we can also target this 27 extension. So let's target this 27 extension. So as you can see, price did get to that 27 extension, right? But price also pushed even higher to the 61 extension. So I only really use the 61 if price has a lot of momentum and it doesn't have any signs of slowing down. I will hold to the 61, and in this case we got that, right? Price, we just had a big push. We never really had any slow down the momentum. So in this case, I actually would hold to the 61. So in this case, you can actually catch a potential, you know, 1 to 3 or higher right here. So this was my examples of how I use time frame correlation to minimize my risk and maximize my reward, right? Give me a high risk to reward ratio. So I like to use these two time frame correlations, the daily and the 4-hour, right, for swing trading, and then the 4-hour 15 for intraday trading. I want to also put out, there are other time frame correlations. These are just the ones I like to use, but if you want to look at other time frame correlations, you also have the weekly and daily as a time frame correlation. So the weekly being the high time frame, the daily being the low time frame. For me, that's just a little too much waiting, right? I don't like using that particularly for trades. I use it for analysis, but not for executing trades, right? And then there's also a lower one, right? Some people also use the 1 hour and 15-minute I'm sorry, the 1 hour and 5 minute correlation. And again, this is also kind of like day trading, but the 5 minutes kind of too small for me. I like to kind of have a kind of in between, right? The 4 hours, very standard, very respected. 15 minutes a little bit more respected than the 5 minute, right? So personally, I prefer these two over anything. I prefer doing either the 4 hour and 15 or the daily in 4 hours. So these are my particular time frames that I like to use, but you can use either one. It's up to you. Same concept applies, right? This is just an example of how I like to minimize my risk and maximize my reward for a higher take profit. And you'll see this like on my videos if you watch my channel. In fact, this isn't even fully how I trade. These are just small examples. My risk to reward tends to be way bigger, right? Like 1 to 5s, 1 to 7s. I'm not showing you my full strategy, right? But in my next video, I will show you how I do catch A+ setups where you can get that full 1 to 5, 1 to 7 risk to reward. So stay tuned for my next video where I will show you how I find A+ setups and how I'm able to use the different parts of the range to get me A+ setups. So until then, I hope you enjoyed this video. Let me know if you have any questions. Until next time, y'all. Bye.